JB here, Friday, March 28th, 3:20. On this fine Friday afternoon, talk quick about the market, some names I'm looking at, go from the S&P futures. Well, not futures, the market's taking on the chin. S&P's down about 2% here. And it's just been, since the open, a rough session. It didn't look like, well, market was kind of holding up at the open, and then it was just I hate to call it a slow, meticulous melt, but that's kind of what it feels like. I mean, the VIX, I mean, it's up 14, 15% here. It's at 2148, but not a huge spike. Like I don't know. I was saying it before in the chat room. It's like the buyers that just can't muster a rally. It's just like a slow melt off, and with all the uncertainty heading into next week, it's just like the easy direction, right? So you start looking at the SPY, and I hate to look at patterns, and of course I tend to be bullish, right? So I hate to see bearish setups here, and I hopefully this bear flag doesn't play out. I was a little disappointed this morning. We broke that 563 on the SPY. That's like a key spot. We couldn't hold the 200-day moving average. Now you got to start look back to the March, I don't know, 13th, 14th, whatever it was when the SPY broke over under 550 for a minute. I I think there's room for surprises next week in regards to the Liberation Day, right? April 2nd. Uh, so maybe we'll get the tariffs won't come in as rough as expected. Maybe there's some tit for tat compromises, and maybe markets can find some footing. Outside of that, now we start to head to the next cycle of data, and that'll be the next thing to look at in April. We don't get a Fed meeting to start of May, so till now, I mean, it's like a graveyard when you read the headlines from all the financial sites, right? It's just, they're talking about the consumer data, like the inflation data came out this morning, like way worse than expected. Income numbers, it's like all these numbers. It's just like markets fall first, then the headlines come up. They create the headlines to rationalize the moves. But needless to say, we'll see how things play out next week. Yeah, 3 o'clock. I was hoping at least we get a bounce, maybe back up to 563. That'd be nice. Doesn't look like that's going to be the case. And the S&P was actually up 0.5% for the week, and now we've given that back down over 1% for the week. So it's going to be an interesting weekend, and we'll see how things play out heading into next week. But that's kind of the thing I'm looking at now is that potential bear flag setup. And then, I mean, with 540, that's we could start talking about a bear market. All right. So that's kind of the overall market, and then just individual things. And you take a look at the VIX again. I mean, it is up 3 days in a row, but it's not up to its levels at the start of March, and it's not where we spiked back in August, anywhere near that. Back in December, we're still below some of those levels. So I always try and keep a grain of salt. And then the amount of stocks trading over their 200-day moving average still dipping, but not at the levels we saw earlier in March. So those are kind of things I look at. And then there's strengths, right? The Visas, the Mastercard, which took a little hit today. I mean, they're somewhat, considering where the market's been, they're holding up well. So I don't know if that's a sign, or maybe it's just a fundamental story in regards to its debt and cash positions and relative to the market. I don't know. So that's that. I was talking about this morning on that news that Trevor Milton got pardoned, right? So I'm not going to waste any more of my energy or air on this topic after today. Or, I mean, I say that I'm crossing my fingers here, because I probably will if some other kind of event or news comes out. But it's like it's so damaging, I think, to the market and the credibility of the market when something like this happens. And I mean, everything's political. I get it. I mean, over the years there's been crazy pardons. I'm not here to talk political. I'm just very disappointed. Because it's obvious. And I'm not saying someone should go to jail, but to pretty much say that this person didn't do what they did when the evidence is there and all this money was spent to come up with the data, do the research and all that, very disappointing. So I made me a little slide. To me, it's like, if you have kids and people that you look up to, or people that look up to you, or what have you, you'd hope they lead you in the right direction, right? And I mean, to take someone who blatantly lied and then saying it's okay, I will end my rent there. It's just like a disappointing, frustrating day today, just to wrap my head around that. It's tough, right? Because you look at these companies, and then especially if these short bear people that come out with these short papers on stocks, and sometimes I'm like, come on, what are they doing? But like sometimes there's a lot of stuff that does go on that's fraudulent or whatever. So it kind of helps keep the market honest when the SEC or auditors or whatever can't catch something. Someone else might, so it's good stuff. But then if you do all that work and then nothing ever happens to us, I mean, what's to stop someone else, right? They can be, oh, I didn't know you can get away with this stuff. Uh, all right, that's that overall. So let me talk about some individual names. So disappointing some of the names. I mean, the week started great, but then as we progressed, just disappointing in regards to some bounce plays. I was looking continuation on Wayfair. Thankfully, able to lock some of those into cover calls. The Roku's at the start of the week. Those were nice trades entering from last week. Uh, and then from there, it's the Dell and the Baidu have been tough here. But I take the good with the bad, and the good is that I wasn't loaded to the gills in calls this week, so it kind of helps make it less painful this weekend. And then today was able to offset with some puts. So that helps. GameStop, it's funny. It was green today, and the premiums were coming out a little bit. So still watching that one. I still think it heads higher over the coming weeks, considering where strategy is today. Was it down 9-10% here? I didn't even look at the last read. Yeah, 9.75%. I mean, it's impressive that's still holding up here. Maybe it's found its bottom. So if we do bounce next week or find a bid, maybe April 2nd will be the day. I might add some more strikes, possibly to Maze. So still like that starting again. To me, it's like a bet on Ryan Cohen. It's an unorthodox story. It's not your typical growth name, but if you're looking at someone who's going to be able to return shareholder value, I think he's the one. So that's GameStop. Dell disappointing, down over 4.7%. It is bouncing from the bottoms. From the bottom, it was like 1 o'clock. It hit 91.51. Now it's up here 92.53. Almost doing what it did yesterday, just not to the extent it rallied yesterday. Still like this one for a bounce. But if the market doesn't rally, it's probably not going to find footing. So gonna need the market to find some footing. But once it does, I'll be adding some more strikes there. Same with Baidu. And the good thing with Baidu is I think it can trade regardless if the market's weak next week for U.S. markets. I think Baidu can still trade higher. So still a name I'll be watching into next week. Still have those calls, but obviously you need some serious help. And then on the flip side here, it's when the market was starting to break and we're at 563. I'm like, oh, you got to be kidding me. I wasn't, I was hoping we would get some kind of pull at the open like we did yesterday, and then a bounce back up to the 200-day moving average. That would have been ideal. That didn't happen. Once we hit 563, there was like a candle, boom, right down to 562.10 or something. Once that broke, and then it was a melt ever since. And there's been a little bounce along the way, but we're right near lows right now. But then trying to find some put hedges, and I was looking at some of the the momentum names. Those are tough. The premiums were still expensive, so I went with the ones that I've been trading over the last couple of weeks in regards to getting put hedges. And first I went with Goldman Spectacular, and with that one, thankfully, and I was looking at the puts earlier in the week, they're very expensive. They were inexpensive on a risk reward basis, so able to get those the 540 puts. It broke under 550, and then I was able to close some out just to cover some costs, and then got the last batch out for 700%. So that helped with the horrible day. And Visa finally showing some signs. I mean, it's only down 2% today, but I mean, the last couple times the market has sold off, Visa's actually been in the green. So was trading that one. Its 50-day moving average 342.74. It's right here at 342.62. I was able to, once I got to Goldman Spectaculars, I sold some of those. Then I got some of the Visas, closed some of those out for over 100%, and then the rest out for over 300%. And should I have held them? I don't know. I didn't know. The market was moving so slow. I figured at some point we're going to have a reversal and a bounce, and we'll just kill the premium. So I didn't want to be in a spot where I held those. That was the thought process there. And on Goldman Sachs, ironically enough, you look at the chart on Goldman Spectacular, its 200-day moving average is 537.52. It came down to 537.71 today. So, I always talk about historicals and technicals on charts and the moving averages and things like that. But just goes to show you sometimes these guidelines, they're not 100%, right? Sometimes they don't bounce at the 200-day moving average. But you take a look at the Goldman Spectacular chart, and geez, if it breaks under that and close under that today, and then there's more weakness next week, you make the case it heads under $500 next week. But that's still next week, and obviously the market would have to continue its tumble. But we'll see what the weekend brings. Tomorrow's next week's next week. It's like folks may be a little worried about holding things over the weekend. I don't know, but I'm just hoping sentiment can kind of shift. It seems like peak. I wouldn't even. You look at a VIX, and you really can't make the case that it's peak fear because the VIX it's not at levels earlier this year and back in December and back in August. So that's how I look at it. But I mean, with all the headlines you just read, it's like you would think, we're in the midst of a crazy recession, and maybe we are. I mean, Q1 GDP numbers will be out. I don't know what. Maybe they'll come out the third week in April. That'll be the first update on that. And we got the GDP now from Atlanta today. That was downgraded again from 1.8%, negative 1.8 to negative 2.8%. So there are signs there, but to me, again, I keep saying I keep things small, open to both sides. Don't have my bull or bear. I don't have my bull horns on or bear suit, but I'm open to both sides of the fence here, and I just hope find some playable moves. And if it's to the downside, then find some put hedges. I'll find some 3-time bear ETFs or even 3-time bull ETFs that I can get puts on, and yeah, go from there. That's it, folks. Have a great weekend. I'll be back rock and roll.